Hello guys, welcome back PSP source. In our previous videos we were seeing balance sheet problem. Now we are going to work out full pack of final accounts, which is covered which cover profit and loss statement and balance sheet. The problems are: A limited company was registered with an authorized capital of rupees 30 lakh in equity shares of rupees 10 each. The following is the list of balance sheet extracted from its books on 31st 12 1994. Purchase given. Purchase means material related expenses, so it comes under cost of goods sold. Wages comes under employee benefit expenses. Manufacturing expenses comes under other expenses. Salaries comes under employee benefit expenses. Bad debt comes under other expenses. Next, director fees comes under other expenses. Debenture interest paid comes under here interest related expenses given. I have already said if you see any interest related expenditure, you can directly enter. You can blindly enter it under finance cost. Finance cost means interest cost. So interest cost, finance cost. Next, preliminary expenses. It comes under reserves and surplus. Calls in arrears comes under share capital. Plant and machinery comes under tangible assets. Premises also comes under tangible assets. Interim dividend paid. Here interim dividend paid given. So interim dividend means interim dividend. This is also I have already explained in my previous videos. If any proposed or interim dividend given, then we need to calculate corporate dividend tax. So here interim dividend given. So it comes under reserves and surplus. Furniture and fittings comes under tangible assets. Sundry debtor, that means trade receivable. General expenses comes under other expenses. Opening stock given. Opening stock means it comes under cost of goods sold. Cash in hand, it comes under cash and cash equivalent. Goodwill comes under intangible assets. Cash at bank comes under cash and cash equivalent. Subscribed capital comes under share capital. Profit and loss, previous year profit given. So it comes under surplus of balance sheet. Next, debenture comes under long term borrowing. Trade creditor means bills payable. Trade payable. Bills payable comes under also trade payable. Sales means revenue from operation. General reserve comes under, of course, under general reserves and surplus. Now, adjustment entry are depreciation of plant and machinery by 10%. So adjustment entry need to be entered in two places. So here depreciation given for plant and machinery. The first depreciation for plant and machinery comes under depreciation and amortization expenses first under profit and loss statement, and next under tangible assets under balance sheet. Okay. Next, provision for half year interest given. Half year interest, it means we need to pay rest of interest of another half year. So interest here 6% of 15 lakh will be getting 90,000. So 90,000 is the interest amount. So out of it, half year interest only given. So we need to pay further rest amount. So rest amount of 45,000 is due amount. So that need to be entered twice in our problem. The places are finance cost and other current liability. We'll see. Next, preliminary expenses comes under reserves and surplus. Next, adjustments are provision for bad and doubtful given. It comes under other expenses in profit and loss statement, and trade receivable under balance sheet. Stock given. Stock means material related expenses, so we have to deduct its balance from purchase and opening stock, and it also comes under inventory and balance sheet. Next, corporate dividend tax given. It comes under finance cost under profit and loss statement, and short-term provision under balance sheet. Here I have prepared notes for profit and loss statement. You can refer it. Now, for preparing profit and loss statement, we need to enter two type of income. For profit and loss statement only we have two type of income, that is revenue from operation and other income. Revenue from operation, sales only given 20 lakh 75,000. Here there is no other income given, so I have put it as nil in that column. Expenses are cost of goods sold rupees 8 lakh 45,000. Employee benefit expenses rupees 4 lakh 94,325. Um, Finance cost rupees 90,000. Depreciation and amortization expenses 1 lakh 50,000. Other expenses rupees 1 lakh 95,675. In right side I have also prepared notes for profit and loss statement. You can refer it, guys. If you get more on revenue than expenses, then you will get profit. Here revenue rupees 20 lakh 75,000 and expenses rupees 17 lakh 75,000. So you'll be getting profit of 3 lakh. Next, if any tax entry given, that need to be deducted. Okay, but here there is no tax given, so we can directly enter that profit amount of 3 lakh as profit after tax. So here profit, so this profit need to be taking for reserves and surplus in balance sheet. Because why? Because this is a current profit, so that current profit need to be considered under balance sheet of reserves and surplus. Let's move to work out balance sheet. So please be remember, guys, the pro forma of balance sheet. Okay, otherwise you won't enter properly the sum. So pro forma of balance sheet already covered in my previous video, so you just refer it. Before workout or balance sheet, we need to take some notes for each category. Note number 1, share capital, equity capital minus calls in arrears, we'll be getting 19,62,500. Next, reserves and surplus. Reserve entry will come first, rupees 1,25,000. Next to surplus. Here surplus means profit. In our problem we have two profit, current profit and previous profit as well. So 72,500 and 3 lakh. Totally you will be getting 3 lakh 72,500. Out of it we have to deduct preliminary expenses 25,000 and interim dividend 1 lakh 87,500. Then less dividend tax. Dividend tax should be taken out of only interim dividend, not out of current profit. So we will be getting reserves and surplus of rupees 2,53,125. Next, working note 3, long-term borrowing, debenture rupees 15 lakh, trade payable, sundry creditors rupees 2,90,000 and bills payable 1,67,500. Total will be getting 4,57,500. Short-term provisions, dividend tax payable rupees 31,875. Next, other current liabilities. Here interest on debenture due comes here, 45,000, which is arises out of 90,000 into 6 by 12. Next, tangible asset, plant and machinery 15 lakh less depreciation 1,50,000, will be getting 13,50,000. Next, tangible assets are premises 16,50,000, furniture and fittings 35,000, will be getting tangible assets of 30,35,000. Next, working number 8, intangible asset goodwill of 28,750. Trade receivables, sundry debtor less provision for bad and doubtful debt 4,36,000 minus 4,250, will be getting 4,31,750. Next, cash and cash equivalent 2,99,500. We know very well, guys, balance sheet have two categories, that is equities and liabilities and assets. Equities has 3 subcategories: shareholder fund, non-current liabilities and current liabilities. Here shareholder fund has share capital and reserves and surplus rupees 19,62,500 and rupees 2,53,125. Non-current liabilities of long-term borrowing rupees 15 lakh. And for current liabilities, short-term borrowing So in our problem there is no entry given related with short term borrowing, so I have entered nil in that column. Next, trade payable 4,57,500, short term provisions rupees 31,875, other current liabilities rupees 45,000. So if you are adding these three subcategories, you'll be getting 42 lakh 50,000 of liabilities, total liabilities. Next, asset. Asset has two subcategories, non-current asset and current asset. Non-current asset are tangible asset. Tangible assets of rupees 30 lakh 35,000. Intangible assets of rupees 28,750. Non-current investment not given in our problem, so I have put it as nil. Next, current asset. Trade receivable rupees 4,31,750. Inventories means closing stock 4,55,000. Short-term loans and advances not there. Cash and cash equivalent rupees 2,99,500. Other current assets not given on a problem. So if you adding these two subcategories, that is non-current asset and current asset, we'll be getting 42 lakh 50,000. Okay. So in our further videos, we'll see various problems with solutions.